Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The government's approach to legislating, regulating and taxing cryptocurrencies and virtual digital assets in India has been that of what we call a switch on and switch off mode till date. So far, the government has thrice announced its intention to regulate cryptos, and it has dropped the idea at the last moment each time, perhaps betraying the pressure that the government faces from different lobbies in the matter. A lobby led by the Reserve Bank of India favors an outright ban on cryptos, and yet another, led by traders, investors and crypto exchanges, rejects any such ban, but it accepts what we call, or what they call, light-handed regulation of these items such that trading of cryptos in the country continues. Cryptocurrencies have no underlying asset and they are extremely volatile, which increases the risk of losses for their traders and their investors. The government has therefore been rightly worried about the surge in speculative activity on crypto trading platforms, which promise quick returns to gullible investors who are quite unaware of the risk of investing in these instruments and are thus exposed to those risks. The government's concerns and action about cryptocurrencies is therefore on multiple fronts. And what are those? The first one is that of preventing tax evasion, money laundering, and funding of crimes that takes place through cryptos. The second is regulating crypto trading and investment and the crypto exchanges through which it is done, which already today transact vast sums of public funds, and the process is meant to ensure that these investors are not cheated or taken for a ride. And the third is preventing cryptos from becoming digital currencies, which neither does the Reserve Bank favor, nor does the Finance Ministry. Of course, the crypto traders and investors wish that were so for most obvious reasons. Their items would suddenly become so precious in case cryptos become a digital official currency of the country. The best way to begin the process of regulating and controlling the crypto activities in any country is to track and tax them. And that's just what the government has now done as it begins its strategy to control and curb this activity of crypto investment and trading in India. The recently formulated tax code for the taxation of any virtual digital asset, which includes cryptocurrencies, to us is harsh and onerous, and its highlights are worth having a look at. The code says that every transfer of a crypto asset will be taxed at 30%, irrespective of whether it is a capital asset or it is not so. And that is notwithstanding the purpose of the investment and the period of holding of the investment. This is thus a punitive rate of tax, being much higher than the capital gains tax rate on any other asset. The code then says that in computing the income from any cryptos or virtual digital assets, the only deduction allowed will be the cost of acquisition of those items, and that no other expenditure whatsoever will be allowed to be deducted while computing the gains from the crypto trading and investment. Even the cost of mining cryptos will not be permitted as a deduction. It then provides that the loss on sale of cryptos cannot be set off against any other income, and not even against gains from any other crypto also. Therefore, the profit on sale of a cryptocurrency cannot be set off against loss from the sale of any other cryptocurrency. The tax code on crypto then says that gift of any crypto will be taxed in the hands of the recipient of the gift. It further provides that to prevent tax evasion and to widen the tax base, and to further ensure that crypto exchanges maintain records of all transactions and report them to the Income Tax Department, TDS will be levied at 1% on transfer of every virtual digital asset or crypto, and thus it is going to block the cash flows of investors to that extent. These are the highlights of the tax code on cryptos. This onerous tax code enacted by the government in the matter of taxation of virtual digital assets and cryptos to us only signals that the government sees it as a very speculative and risky activity which it seeks to curb, control, contain and discourage. The government is not at all comfortable with this item or asset, which has been rife with tax evasion, money laundering, and frauds. And the government has often clarified that taxing cryptos does not mean that it has been legalized or legitimized in any manner by the government. The government is using the tax provisions as a deterrent to prevent speculation and investment in virtual digital assets, and these provisions do not mean that cryptos are being recognized as a capital asset by the government. The finance minister recently then said that people are putting money, people are taking money, people are creating assets, and that assets are being bought and sold. She was referring to cryptos. So obviously, she says that the government made its position clear that we shall tax the money generated out of cryptos. To make it clear again that the government is not at all done with on the crypto front, the finance minister rejected criticism that the government's messaging on virtual digital assets and cryptos was unclear. And she said that there is no confusing signal in this matter. The finance minister said that we are very clear that consultations in the matter are going on as to whether we want to regulate it to some extent or totally ban it, and that until then, the government will levy tax on transactions involving these assets. So as far as the government is concerned, while it takes time to formulate a final law or a regulation on the matter, it will continue to tax any gains that arise out of crypto investment and trading. The next step now for the government is to regulate the crypto exchanges, the traders and investors and the intermediaries in order to protect public interest and regulate their activities, just as it does in the case of any other security or activity that involves public money. As of now, there is a regulatory vacuum in the domain with no regulator, no regulation, and thus no reporting also in the matter of cryptos, despite the involvement of massive public funds. And that regulation and a regulator are certainly very urgently needed. As per the finance minister, consultations are on, and the next phase of policy making on cryptos, which is about their regulation, should be announced at the earliest. The fact is that the inherent nature of the new tax code for cryptos is extremely onerous and punitive, so as to discourage this activity. And according to us, that will also be the tone of the next step of the government policies for crypto control and regulation. The way ahead in the matter of crypto policy that should be unfolded to us looks very likely to be of the same tone and tenor, onerous and harsh. So what would it be? To us, the government will not ban crypto trading and investment totally, but it will regulate it very strictly with harsh and stringent regulations. Cryptos have caught the fancy of the world, and India cannot be seen to be out of it. Thus, crypto activity will certainly continue in India under the proposed regulations, but under a very tight regulation and regulator. The second likelihood is that, like in the case of crypto tax, the regulatory policy will also be anti-crypto in nature, but it will not impose a ban on crypto trading and investment. As we said, the activity will continue. Further, crypto will not be allowed to become a currency or a legal tender in India, and thus, while crypto trading and investments will be permitted, they will not be allowed to become a legal tender to receive and make payments in India. Further, even though crypto asset differs from a CBDC, which is a central bank digital currency, and they are supposed to operate in entirely different domains, the proposed regulations will further ensure such a differentiation for sure. Much as the consultations continue between the finance ministry and various stakeholders and stakeholders, and contrary to what the finance minister says, the government seems to be in no hurry, in our opinion, to formulate the crypto regulation and anoint its regulator, unless, in the meanwhile, some major crypto scam breaks out and the government is caught napping on the wrong foot. Notwithstanding, or except this, we think that formulation of crypto regulations and their approval by the parliament will take a much longer time than what we think. The tax proposals and tax collection on crypto transactions matter the most for the government, and those are the ones that have been formulated by it with top priority already. The next set of policy making by the government will to us take its own time. Tax and TDS will continue to ensure that the government gets crypto data and taxes too to be able to keep an eye on crypto activity all the time. And finally, the government will in the meanwhile let you trade and invest in cryptos and virtual digital assets, and it will collect punitive taxes on your gains from it all the time. The latest reports say that the tone of the crypto tax proposals have got the crypto world worried, and that its investors have been queuing up to seek clarification and advice on the way forward. The provisions are clear, but it will take time for clarity about their procedure and compliance to set in. Only practice will say how they finally fold out. The TDS provisions, the tax rates, the lack of any flexibility in the set-off of crypto losses, and the refusal to grant deduction for expenses have got the investors and the traders worried more so, because the underlying message is that even if you indulge in the smallest of crypto trade, you are on the government radar, which is clearly unnerving to anybody. The inflow of funds into cryptos after the announcement of these tax proposals has been muted. While the crypto industry seeks clarification from the government, the general opinion is that these onerous tax provisions will not be good for the industry, and they will certainly curb its activity and investment substantially. But then, that is incidentally just what the government wants when it formulates the crypto tax regulations ultimately. This is Akhilesh Bhargava signing off till we meet again. Namaskar.